Good afternoon, everybody. Good afternoon. Good afternoon. What's up? Hope everybody had a good day today. A lot of opportunity out there today. Let me do disclosure. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and a member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There is the position disclosure. I'm getting pretty light on long positions. That must mean that the market's gone up a lot. Man, my shorts here held on by a thread this morning, but worked out really well today. We can talk about that. So, happy to do the afternoon meeting here, usually on Wednesdays. So, T3 Live does this Conversations with a Pro Trader on almost every Wednesday at 4:30 p.m. Sometimes I'm the guest, sometimes Pat's the guest, Scott Ruther's the guest. Today's guest is John Devine. I've spoken to him, but I don't know him very well. So that's going to be at 4:30 today. Let me see if I can send over a link. It's through LinkedIn. I think that link should work if you need to register. So we'll probably look to wrap up the afternoon meeting a little bit quicker today, so everyone can turn over to that Conversations with a Pro Trader with Greta, so we can learn a little something else. I should be up on YouTube right now. Let me pull that up real quick. So we can learn a little something else. If you're a guest from Benzinga and you haven't subscribed to my YouTube, this is just a link to today's afternoon meeting. I live stream only the afternoon meetings. So the morning meetings with the ideas and everything and the real-time stuff, obviously I'm not doing. But I live stream the afternoon meetings to my YouTube channel. Give it a subscribe if you have not already. All right, with those items out of the way, give it a subscribe if you have not. Let's jump in. So right now the SPYs are flat. We actually closed red. We're trading up here after hours, 50 cents or so in the SPYs off of the backs of the snow earnings report and the Salesforce earnings reports primarily. They're up solidly. Snow's up 10% right now. CRM's up 8% right now. I didn't look at the numbers in too much detail, but we have them posted here in the VTF. Snow product revenue looks like a crush. Let's see here. Third quarter adjusted diluted EPS beat solidly. Revenue beat solidly. Product revenue beat solidly. Guidance here, Q4 product revenue guiding up. Operating. I love, and I think the market loves when these operating margins beat like that are continuing to improve. I love great for Snow, and they're adjusting their revenue guidance up as well. So that's a great looking report from Snow. What's going on with Salesforce? Salesforce is up. EPS is a really solid beat. Revenue looks decent. Operating margin is a little bit of a beat. EPS is a really solid beat. Looks like they're guiding higher on EPS. Operating margin is a little bit of a beat. Revenue they're guiding, it looks like in line. Yeah, so not bad. So it's helping the market uptick a little bit here after hours. So again, we actually closed red, but as of now, it's the 50-cent after hours uptick. The SPYs are flat, and the Qs are up 50 cents after hours also to get back to flat. IWM is where the relative strength was today. The Russell is up 0.6% here. So a lot of relative strength in the Russell, but the technicals today are looking like a push through failure on the bull flag breakout. So that's an interesting development. Is it possible that this market could actually fade back down a little bit off of a bull flag failure? Well, usually it's a pattern that actually does lead to some lower price action, so we'll see. I'm going to come back to the 5-minute chart. Let's actually start with the daily because this is where the story is. Real solid gap up this morning, right? And the conversation in the morning meeting today was, well, this is a bullish pattern. The bullish pattern is triggering. What's the probability of success?
conversation in the morning meeting if I was going to sum it up. So technically, it was a breakaway gap for the SPY. We were gapping up above our resistance area. The main spot I've been looking at was last Wednesday's high, which is 456 spot 38. We gapped above that. For the Qs, we opened up right around that area, so it was a potential intraday breakout that was actually happening off the open through 394.07. And this is right as, whether you're looking at the SPYs or the Qs, we built out this beautiful bull flag to satisfy daily chart extension versus the ADMA. The ADMA fully caught up to yesterday's low in the Qs. It just about got there on the SPYs, not quite, but just about got there. And again, technically, when do bull flags usually continue? They usually continue when the ADMA catches up to the base. Now, I was trying to balance in the morning meeting this morning, saying, well, guys, you know, let's just look at things here on the surface and keep it simple. This is a bull flag breakout with the ADMA catching up. November has been an extremely strong month. If the November playbook that we've seen so far this month continues, we could have a massive upside day on momentum bull flag continuation. But I specifically said I need to put a big asterisk on this, and in the back of my mind, I really felt that this bull flag could fail. It's just that my feelings don't really matter. We have to, you know, study the market in terms of risk reward, or in this case, probability of success. And I felt that the probability of success of real bull flag continuation here was actually going to be lower for a couple of reasons. And one is I've been consistently for the last week or so describing how this move has happened so quickly that it is creating a really wide spread between the 8 and 21 EMA. So that actually, the extension to the 21 EMA actually means that there will be a lower probability. Oh, there's an echo on YouTube. Sorry guys, I got you. Fixed it. Should be good now. Anyway, the space down to the 21 EMA here is still really wide. So that should, you know, there's a lot more extension there, and also the extension on the weekly chart has gotten a little bit more significant. And then finally is the data, right? And I want to see where I have Pat's note from this morning. This should be it right here, the 29th. We've been noting that flows are still supportive, but they're much less supportive, right? One of the things that got me super bullish at the end of October was just the flow data. The CTAs being net short. We saw that, you know, hedge funds had shorted individual equities for a record 14 weeks straight. You're coming into November, which is the biggest buyback month of the year, and now that November has ended, we're seeing that this November was the third biggest month for buybacks, basically in market history. $5 billion a day, and buybacks were coming in. So there was so much flow that was set to come into this market that it's what really, you know, set off the bull thesis to begin with at the end of October. But it's gone now. It's all eaten up. You know, we've seen the data. We know that the CTAs so the CTAs bought more, right, because they were short coming into the month. They bought more over the course of the month of November than they have in any other month going back in the history of Goldman's data set. And they're kind of a little washed here. So if you look at Pat's note from the CTAs, there is still a supportive factor to it. $5 billion to buy over the course of this week in flat tape, $4 billion in up tape, $1 billion to sell in a big down tape. That's as opposed to, I don't remember exactly what the numbers were, but there was weeks where I feel like they were buying like $10+ billion a day, like significant amounts. And now you're looking at $5 billion over the course of the week. It's still supportive. It's still buying. It's just not what it was. And then Bill this morning, I don't know if Bill's still here. Bill actually gave us an update on some data that he has from the trend following systematic funds that basically also said, I'm going to copy and paste it right here, I just found it, that basically also said that this was not potentially as supportive as it was previously, that they were kind of turning off their
their buying ability. So yeah, you still have the buybacks in the market, though they are going to be coming into a time where that should be slowing down also pretty soon. And then the flip side is we have a little extra weight on this market that's actually coming from pension rebalances into the end of the month. So that's what our flow picture looks like. You can't say I don't think that flow picture is bearish, but it's definitely not, in my opinion, bullish anymore at all, at least for the moment, let alone as bullish as it had been for the entirety of this month. So I'm looking at this gap up this morning, and I'm looking at this potential bull flag breakout, and I'm like, I kept saying in my head, like, yes, but. Like, yes, it's a bull flag breakout. It's a potential breakaway gap. But the extension from the 21 EMA, the extension on the weekly chart, the flows that are not nearly as supportive as they were, therefore, there is a much higher probability of an actual bull flag breakout failure here, which now at the end of the day is exactly what happened. Position management was a little bit difficult for me. Luckily we recognized the intraday price action really well. I've had a game plan because I've been, increasingly short recently on my QQQ and SPY positions via leveraged ETFs, where I thought that last Wednesday was a really, really key high, and I have a lot of excess stock on the short side. And the general game plan that I had was to stop myself out above Wednesday's high if the market gets above that amount. We got above that in both the SPYs and the Qs. I also have what I call a 15-minute rule. Anybody who's been trading with me for a while knows what that is. That's related to swing positions, where I really don't get out of my swing positions if they go through my out via a gap in the first 15 minutes of the day. I always really wait for that first 15 minutes of the day, because that's the first 15 minutes of the day is a lot of times when you get panic selling, or in this case potentially panic buying, and a lot of times that can actually end up marking a kind of major high or a major low. So if I have a swing position that's on, and technically I understand that this opens me up to unlimited risk, but it's really not unlimited risk, because my risk becomes limited. Instead of it being limited by price, it's limited by time. It basically tells me you should always be patient in the first 15 minutes of the day. And I'll tell you, that rule has saved my butt on swing positions on a number of occasions where I've been nearly stopped out of stuff that otherwise ends up honestly working really well, and that I wouldn't have had otherwise. And today was actually the exact same scenario. We ripped in the beginning of the day this morning. I was very much losing money short the indices for my swings. We got this shooting star that came in here at 9:35, so that marked your 15-minute high. Even though it's above Wednesday's high, I'm not out of position yet. The harder one was actually, for me, the SPYs, because the SPYs made one more new high here, but I did honestly possibly slightly violate my rule. I just felt that I was looking at a lot of confirming factors as this market was moving higher that said that this rally was going to fail. And the first and main one of those confirming factors, Pat said it first, and then our guest here, Marty, mentioned it second, was how the VIX was moving higher with the market. You gotta be a little bit careful with this. It's just a piece of information. There have been periods of time in the market where I've seen the VIX move higher with the market, sometimes for several days in a market up, vol up type of situation. And again, that usually does lead to a high, but that high doesn't necessarily have to be in 5 minutes. If I'm seeing the VIX move up with the market moving up, again, it indicates that you're getting close to a high, but that high doesn't even necessarily have to be today. That could be 2 days from now, that could be a week from now, but it is the beginning of a signaling mechanism, provided that it continues to happen and it's not a false move. Sometimes we do see false moves. We also did know that there's been a VVIX divergence. Pat had mentioned that again in his morning note. I don't have an update on the VVIX as of right now, but I was looking at, when I'm like kind of shaking in my boots a little bit on my shorts, because I am heavy. I'm looking at this VIX making highs, and honestly, I'm looking at some of these mega cap stocks going red, and that was the other thing for me. The way Microsoft traded here off the open, the way Meta traded here off the open, these things were atrocious. Obviously, others were better, Apple had a really strong first 5-minute bar. Nvidia had a really great initial move. Tesla was holding in really well, but you know, Google, which tried to be strong, broke this wedge to the downside. This ended up being like a brutal sell-off. So I'm seeing some major pockets of weakness. Amazon was strong for 25 minutes before it broke down. Also, I'm seeing some major pockets of weakness on you know, some of these individual mega cap tech stocks, and I know that my short is very heavily concentrated in the Qs, which is very heavily affected by these mega cap tech stocks, and I'm like, the VIX is making highs, the market's extended on a small time frame, so I really don't want to liquidate this position on this new high with this amount of extension on the 5-minute chart versus the ADMA. I was like, let me give this just a little bit of breathing room here to see what this market looks like when the ADMA actually catches up to price, or price catches up to it. And when price caught up to it, it was by that point via a really big price correction that started coming in at 10 a.m. that started to signal that I was right. And on top of that, I heavily added to my shorts again, which we communicated here in the VTF. I think I shorted specifically off of this high in the Qs, which was a great little shooting star high on a 5-minute chart with big extension that was a little nerve-wracking because the market held in for 15 minutes and was starting to build out a bull flag. But with all of this extension still in the 5-minute, what I was just saying about the daily chart on the market applies on small time frames as well. When the bull flags usually continue, they usually continue when the ADMA catches up. The ADMA is nowhere close to catching up. So okay, that new high never broke. The SPYs were a little bit more patient. I called the short out off of the 955 candle, which was perfect. Once the doji came in, third bar up, all this extension, still seeing some of these big cap tech stocks rolling down, still seeing the VIX move up, called out this short also. So I took big ads again today in the TQQQ and the UPRO short positions that I already had on, which they were, you know, starting a swing position, so they were definitely a lot out of the money at one point. Adding to those, and obviously it worked really well. So now here at the end of the day, we're looking at bull flag failures for the SPYs and the Qs. Can we actually get a real correction in this market? You almost, recency bias, right? You almost forget what it even feels like for the market to go down. It felt like at the end of October, no one could even remember what it felt like for the market to go up. Now no one can remember what it feels like for the market to go down. I'm not calling for a retest of October lows by the end of the year by any means. And big picture, I still kind of am bullish through the end of the year. I've been bullish this entire time. I just got really net short starting Wednesday for no other reason than just because the degree of the move here was so obscenely outsized, and the extension was getting so ridiculous as well. So my shorts, even though they're heavy, they're meant to kind of be shorter term shorts. So I'm not looking for more than really a move to SPY 450 out of them, or maybe a little bit lower than that, you know, upper 440s. See what this 21 EMA looks like as it's beginning to catch up, and then, you know, we'll see what we're looking at. What this market starts looking at as we come into the end of the year and December, and then everybody's going to be talking about Santa Claus and all that fun stuff. So that ended up working out really well. At the same time, we had some really solid intraday momentum trades off the open. That AI was really great. I know a lot of these ended up failing because of the market. I'm not surprised to see that. But the off the open buy in AI, I think we were talking about versus like $30. This was one of Elliot's ideas. I took this one with pretty decent size. It worked great. You know, my price was like 30 quarter or so. Initially, I was giving it 25 cents worth of risk. Eventually, I was able to tighten my stop up to the low of the day. So I got stopped out of the rest of the position when that low of the day broke. But, you know, at that point, you're catching a move that's, you know, $1.50 to the upside. If you don't make money in that, it means that either your game plan is terrible or your execution is terrible. Peloton was another one. Also eventually ends up kind of failing here because of the market. That opening low broke. Similar situation. At first I bought versus I think 570. Once the ADMA cut up to lows, I was able to raise my stop to lows, which was great because my price on this was $5.72. Low of the days at that low of the open's $5.73. I bought it just before the market opened. So this is another one. You know, I'm gonna make money on this even if it's a failed trade and I get stopped out on it. So that stuff was great. I fully liquidated because it hit my target this BYON, which we've been watching this base for a while to see if this thing could break up to the space between $19 and $20. It went yesterday, gave some follow through this morning. All the retail was really strong. I know I wasn't in it, but Elliot I think was in Macy's. I hope some other people caught it. Nordstrom looked like it fell back down, but gave a good opening move. There was a lot of stuff off the open this morning that worked really, really well. And then I know some of you guys were trying to battle coin again. I get it. It was weak off the open, but this pushed through highs when the market at that point had already failed at 950 is ruthlessly brutal. I was not in coin at all. I ended up getting out of it after hours yesterday on a downtick. I got filled on the bid and wasn't in it at all today, and I didn't trade it at all today. I was kind of tempted to short it, but I just, I listened to my own advice, right? I listen. This path is moving right now here after hours a little bit. They have earnings tomorrow. I listened to my own advice from after hours yesterday when I was analyzing that coin move, and I was like, this is just the hard money. Even this AI as an example, which eventually fails, it eventually breaks its opening low. Even if I bought this off the open and it straight failed, this is so much less stressful to be with the trend and with the momentum on potentially breaking out stocks. It goes back to what I was saying yesterday with coin. It's like, yeah, you could try to battle this thing to the short side all day yesterday, or you could have just bought the breakaway gap on the 20th for a very small amount of risk and be long from $100 and be $30 in the money. Like, I know that this AI failed today, but all these coin trades that you take, like on that day, they start as these trades. And sometimes they work and sometimes they fail. So, you have a game plan in place for how you're going to manage your trade where you're mitigating your risk if your idea fails, or if you get a move like we got today and then it fails, you can actually make money in a failed trade. I love that. And let alone if it actually truly works. If it truly works, this thing closes at 32.50 today on great momentum with confirming volume, gives a day 2, a day 3, gets exhausted on day 4, and you're looking at this thing at $38 and you're $8 in the money on your initial 25 cents worth of risk. Those are the trades that I would rather be involved in, even if I do the counter trend stuff from time to time. It's so much harder trading. It's much less forgiving on mistakes as well. Those with trend trades they tend to be more forgiving. So that's pretty much the focus on things, and that's pretty much all I got for today. I don't really want to take questions today because I want everybody to be able to move over to conversations with a pro trader with Greta. But if anybody's got any quick ones, we can take a quick look at it.
Who's on it?
John Devine.
Oh, no way.
Yeah.
I love John.
Yeah, I might be.
He's a crypto guru. If you guys like crypto, listen to John Devine. He's a good guy.
I don't know anything about crypto.
Oh, you like crypto. He's a good guy.
I've spoken to him in the past. He is a nice guy. Can I get some feedback on the trade I took in coin? I did the RDR short in coin today at 10:05 after it pushed me through highs and fails. Also the market. Yeah, Gabriel. Just a real quick answer. This is a question from YouTube on coin. I think that you did a good trade. Coin was just ruthless. That push through that I already mentioned on coin on the 5-minute chart to new highs when it was weak off the open and the market was breaking down. It's just absolutely ruthless. It's a really tough stock to trade. But I think it was a good idea. I had a negative note on it this morning. It was weak off the open. It was one of the few red names. It wasn't gapping up. Like, this is a good spot to focus, I think, on a short, plus the extension on the daily chart, and it's still pushed through. It's tough. All right, cool. I'm not really seeing any other questions, so I'm just going to wrap it up. I encourage everyone to hop on over to Conversations with a Pro Trader with Greta and John Devine. It probably started 4 minutes ago. I posted the link here in the virtual trading floor. Have a great night, everyone. I will see you all tomorrow morning where we will assess how the market is set to gap and come up with a game plan for the day. See you then.